Welcome to another episode of Stately Investing with your host, Burnett King. If you like the content I'm putting out there, give us a thumbs up. If you love the content I'm putting out there, give us a subscribe. It really helps the channel. If you have any questions, feel free to leave them in the comments section or send me an email at statelyinvesting@gmail.com. And let's get started with the show. All right, everybody, let's get started for the week. So we're going to start off today's episode with a quick look at our passive income and how it's doing. We're also going to talk a little bit about Boeing and the potential bailout from the U.S. government, also its dividend, and we're going to talk about Robinhood. So I haven't really talked to you guys yet about Robinhood and what I use it for, so we'll get into that. But first, let's start with the passive income stream. So looking at the weekly view, we are down about 14.35%. And then that is coming from, $6 in earned dividends and quite a bit of drop in the market gains. Overall, we are down 36%. Have a weird spike here. I think this is just a M1 bug, but we are down 36% overall. Total value of my portfolio is right at 9,600. You can see I've put in around 12,600 and the market has lost 3,000 of that. And then here are my gains, right? So 3,000 offset by this $143 in dividends. So overall, it's matching pretty closely with the S&P. So again, if we look at the weekly, down around 14%, and we look at S&P 500, 5-day, down almost exactly 14%. I think I lean a little more heavily in oil stocks, and so that's why I am down a little more than the S&P. So overall, what I did this week, I looked at the prices of some of my holdings and tried to figure out where I could spend some money to buy some things that were on sale. So if we go to my holdings, all right, you can see what's lowest in gains, right? So what's down the most, no surprise, oil and energy companies. And then some finance companies as well, makes sense. Life insurance companies not doing so great with the coronavirus. But overall, there's a few companies in here where, I was thinking, wow, this is disproportionately high. And so I started to look at which companies should I invest in. Particularly, there was a few that I thought were like crazy in the middle of the week around the REITs that were dropping. So in particular, I looked at Store, which was down. So we can jump over to that. You can see the 5-day here started out around 23. It's now around 17, almost 18. And I bought somewhere in the $18 to $17 range. I haven't bought at this $13 range, but I'm thinking about buying more. So let me know in the comments if you guys think Store is a good company to invest in right now at its discount. So what I was trying to do is I was looking again at my portfolio, and if you go to my activity, you don't see anything too abnormal. I didn't buy any stocks directly in M1 because my portfolio isn't built for that, but I did want to buy some individual stocks. You can see this $500 was an extra deposit. So my normal $500, I do $500 bi-weekly on this account, and the 13th, so last Friday, was my last normal purchase. I did buy some more, another $500 worth here on the 19th. Just to take advantage of some of these low prices. So you can see what M1 decided to buy to try to balance out my portfolio. So quite a few things, right? 21 stocks. It did weigh heavily on some of my REITs. So Realty Income was down quite a bit at the time. Store Capital was also down. So it did purchase some of those things. Also energy as well. So I think it did purchase Valero at 58. So some of the bigger companies. But I also have a Robinhood account. So let's go to my Robinhood account. You can see my portfolio. So you see I have around 1708 right now as my portfolio balance. In particular, some of that's still sitting around as cash because there are cash delays when you're putting in money into Robinhood unless you have their upgraded account, which allows you kind of instant access to your cash. So there was some delay on me buying shares, but I was able to buy Store. So I bought individual shares of Store. I bought a couple shares of Realty Income, and then I bought one share of Boeing. So what's funny about Boeing, and we'll get into that in a bit, is that I don't have it in my passive income portfolio. Boeing's been on such a downward trend since the 737 MAX incidents that I didn't really think it was going to recover anytime soon. But I was starting to get to the point where I'm like, okay, now that coronavirus has hit and Boeing has been just hammered in the market, I think it's starting to approach its bottom value. And so let me try to buy some shares of that. So because of the cash limitations I had, I only was able to buy one share, but we'll get into Boeing in a minute. So looking at Store, you can see it's sitting at $17. You can see my average cost was $18. So I bought a couple of times here. And you can see my overall cost was $8.11. My current equity is $7.65. So even though I bought at 18, the price has come down to 17, and so you can see the drop. But Store overall has a really good balance sheet. I think the significant drops in Store this week, let's look at the week, really came from the fact that or cities around the U.S. are closing a ton of stores, right? And I'm in the Austin area, and things here are pretty much on shutdown. So grocery stores are still open, and certain stores are still open, but for the most part, they don't want people gathering in large groups, and they don't really want you leaving your place unless you have to. A lot of malls are shut down. So Store has a lot of these kind of retail establishments in their REIT, in their investment portfolio. But overall, they have a really solid balance sheet, as we talked about in one of my other videos. I'll link it up top. But you really want to analyze the balance sheet of these companies that you're investing in to see if they are financially stable and can handle downturns like this. So I thought the reaction for Store being down so much was just an overreaction. I still think it is. $17 is super low for this stock. I think I will be purchasing some more. So you can see this day here, it was March 18th. It dropped significantly, and I was able to buy some there, and then it came up some more, and I was still buying. Came up significantly on Friday, but then it started to drop back down like the rest of the market. So I think I'll be purchasing more Store, but again, let me know in the comments if you think that's a good decision. So this is what I use Robinhood for, is to buy individual stocks. They do have a fractional shares list, but you can see I'm on the wait list with it looks like 2 million other people, so not getting off of that wait list anytime soon. But overall, I use this to buy individual shares, whereas in M1 I use that for my portfolio and my passive income stream. I also have a couple other M1 accounts for like a Roth IRA and then a bonds fund as well. Maybe we can do a video on those at some point. But I will put a link in for my Robinhood if you guys want to download it, try it out. I know they've had a lot of issues in the recent weeks with not being able to trade. It seems like they've gotten those straightened out. But if you're interested, click the link in the description and you can set up your Robinhood account. It would help out my account. So let's jump into Boeing, right? So Boeing has had an interesting week. Boeing has asked the U.S. government for a bailout. You can see one of the headlines here, Boeing's nosedive from leading the Dow to asking for a bailout. It's very interesting. So there's a good article on Seeking Alpha kind of detailing the issues with Boeing, right? So they're in discussions to receive a $60 billion bailout package, which is what they asked for from the government. What happened is that the company has really returned a lot of that money to shareholders, either through their dividend. So their dividend is about $5 billion annually. And then they also were just buying back shares constantly, right? So as their share price was dropping, the board decided, let's continue to buy. And eventually the stock will turn around and it'll make us a ton of money. But what's happening is the stock is not turning back around. They spent a ton of money on these share buyback purchases, and now they don't have enough cash to stem the problem of the coronavirus, with the air industry just kind of drying up because no one's traveling. So, they didn't want to touch their dividend, right? As this shows here, they didn't want to touch the executive payments, right? So they have executives making millions of dollars. And then, they all of a sudden were like, oh, they complained for years about Airbus and Bombardier getting money from their governments to kind of keep them financially stable, and now they're asking the United States for the exact same thing. So that's a interesting bit of hypocrisy there from Boeing. But all of this was a little early. This article came out right before on Friday. Boeing announced that they are going to actually suspend its dividend. So suspends its dividend, will stop buying buybacks, and stop paying their CEO and chairman amid this pandemic. So Boeing has actually addressed what was in that article on Seeking Alpha. And I think there will be a lot of stipulations if the U.S. government actually decides to buy out Boeing or to help them bail them out. I think the government's in a good position to demand a few things in particular. And so I think Boeing will probably have to do whatever the U.S. government tells them in order to stay in business, right? Because a lot of people are saying, well, you spend all this money on your dividend, you spend all this money on share buybacks, and now you want money from taxpayers to bail you out. But I think it will happen. So I think the buyback will happen mostly because the U.S. military is highly dependent on Boeing. The U.S. space program is highly dependent on Boeing. And so I don't think the U.S. government wants to see Boeing fail. So overall, this leads me back to back a few days ago when I decided, let's buy a Boeing share. So my question for you guys, again, you can put it in the comments, is do I invest in Store, where I know it has a solid balance sheet and people are overreacting, similar to Realty Income, but I think Store is actually a better deal right now? Or do I invest in Boeing, right? So knowing that the U.S. government is going to bail them out. The problem with this is Boeing will probably cut their dividend entirely, or at least pause it for a sustained period of time. And so it's not really along my strategy of dividend growth investing. I don't think the dividend will grow anytime soon. This would just be a more typical share purchase where I'm expecting the value of Boeing to go up in the future, and I hold on to those shares and then sell them when I thought it was a good time to sell. So I'm leaning towards buying more shares of Store and just holding on to them because I think their dividend will keep growing. I think it's a solid company. I think their realty portfolio is actually in a really good shape. They're protected from a lot of things. It's not, Simon Property Group where it's a ton of malls or things like that. So let me know in the comments. Hopefully you guys are weathering the storm. I hope you guys are staying safe out there. Remember to wash your hands. Remember to stay at least 6 feet away from people if possible. And hopefully if you do have to work, you're out there and you're being safe. If you can work from home, work from home. And hopefully you guys are, taking this in stride, and hopefully you guys are finding good opportunities to buy some stocks out there. So I think that's going to be it for today. Again, I'd love it if you hit the subscribe button, or if you give this a thumbs up. Feel free to email me at statelyinvesting@gmail.com with any questions or comments for the show. And I'll see you guys again next week. Thanks.